How's it going, guys? Welcome back to another video. Thanks for tuning to Stock Essentials. My name's Alex. We're going to be going over an options play for small accounts. And it's going to be a fast way to grow your accounts and with very little risk. A lot of you guys like these small account plays, high risk, high reward. And this play is going to require just a few dollars just to open them, which is pretty good, and you can easily 10x your money or even more with this options strategy. So you want to pick a stock that you think that it's going to stay flat. Obviously, the more volatile it's going to be, the higher the risk, but the more profit potential there is when a stock is more volatile. And with a strategy, you want to stay within a range, and that's really where you're going to be making the money. So we're going to go to AMC options. AMC like to trade options on this stock. It's been pretty profitable, pretty high premiums, which is why I like trading it. So currently it is November 23rd, and we can do a November 26th expiration date, which is going to give us 2 days of expiration. It's going to be Wednesday 23rd, and then sorry, it's gonna be 3 days of expiration. Tuesday 23rd, Wednesday 24th, 25th is a holiday, and then 26th. So it's gonna be a pretty short expiration. And we're gonna be doing an iron butterfly. And how you open it, it's very similar to an iron condor, but both of your cells are on the same strike. So let's say that we think that AMC is going to stay relatively close to $41 price point, which it has been in the past few days. We're going to be first selling a call on the 41 strike and then buying the one above it, the 42. And next, we're going to go to the put side. We're going to be selling the 41 and then buying the 40 right here. As we can see on our right side of the screen, total credit is going to be $91, which is actually pretty high because let's go ahead and take a look at the expected profit and loss here. The max profit is going to be $91, max loss $9. Because if we check out our order here, our collateral is going to only be $100. So effectively, we're only putting up $9 of collateral because we're receiving $91 of credit in return. So we're risking $9 to make potentially a max profit of 91, as we saw on this chart right here. And effectively, as long as AMC stays between $40 and $42, you're going to be making money on this trade. So it's a very low amount of capital you're putting up, only $9 you're risking, but there is a high profit potential as where we can 10x our money, 1,000% return in just a few days, as long as it stays within that range. So that's a really good options play to pick. But you could also drag out the expiration date, let's say December 3rd, giving us another expiration. And the further the expiration, probably the less likely it'll hit. But this is high risk, high reward plays, perfect for small accounts. And let's just assume we think it'll stay within the 41 strike. We're going to be placing our cells on that again. And of course, if you think it'll be like $45 at expiration, you could put your cells on that. But for this example, we'll just use the 41 strike. So we're going to be selling a put and then buying the put under it, 40. We're going to be going to the call side, selling the call at the 41, and then buying the call at the 42. Sorry. And look at this play right here. Minimum credit is actually $100. And that's because the bid and ask spread is pretty wide for this trade. As you can see, 68 and 131. So with a very high bid ask spread, we have to change our limit price because we can't actually open up this trade if our minimum credit and our collateral is the same. It just won't let you. So we'll do 0.99. As we can see here, pretty nice trade. You're risking $1. As we can see on this chart right here, max profit $99, max loss $1. It's pretty much a dollar option play. Very, very nice options play. But it is pretty risky. I would say it's a low chance of winning on it, but you're not risking much. You're risking $1 to potentially make almost $100, which is pretty insane. If we take a look at our calculator, let's see how much profit that actually is. So it's going to be our minimum credit, $99 divided by our collateral, $1. That's pretty much a hundred 99x your money. Um, Almost a 10,000% return, which is pretty insane if you think about it. In order to make 10,000% return, AMC has to stay at $41 at expiration, which is December 3rd, which is kind of unlikely because AMC is pretty volatile. But as long as it stays within this range, you're going to be making money, as we can see on this chart. Um, if it stays between $40 and 42, you're going to be making money. If it goes, say, if AMC ends up at $40.50, you're going to be making a pretty good return. You're making $40, and you're only risking $1 to make this. So this is perfect for people with smaller accounts looking for a little bit more risk and want to grow their accounts exponentially really fast. But keep in mind that this is not really viable for people with bigger accounts because you don't really want to open up hundreds of these contracts. They're pretty high risk, and you can easily lose your money. But for people who have a few bucks to spare, this could be a really solid strategy. That's about it for this video. If it helped in any way, please leave a like, comment down below what your thoughts are on the Butterfly, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.